and you do 2 contracts, you'll make $100 to $200 a day every day. Every day. Now, you can stretch it. I mean, I had one of these realtors call me up and tell me that he's going to start trading 20 contracts a day and do the same trade. I don't care. I don't make any money on your contract at all. But I do it in the book. It does tell you how to negotiate your rates. You know, if you're going to talk to other brokers, they're going to charge you $7 at Thinkorswim if you don't ask for it to change your rate. But you can get them to give you $4. All you got to do is talk to the right guy, a guy named Tom Sosnoff. You can write his name down. He'll give you $4.
That's Scott Sheridan anymore?
No, it's Sosnoff. That's the guy who's been doing it. Sheridan might if he's still there. I don't know if he's still there, but
I sent him an email, but I didn't get any response.
well, he may not. He may got pumped
Either
up.
he didn't want to lower the rate, or he
But
didn't
if you
do it.
call him, and you know, if you're trading futures, you know, you really shouldn't be trading for more than $5. And $5 is realistic to somebody who doesn't trade a lot. But if you're trading every day, $4.50. You know, that's reasonable. Per round trip. Per round trip. $2. That's $2 per side, guys. So there, I apologize. 2 and 2.
What are the timings? When can you do the future? Any time in the day?
Well, let me tell you when it's closed. And I didn't mean to do this. Is that okay? From the market closes at 4 for all of us, yes?
Yes.
But not futures. Futures goes to 4:15. As you mentioned, it just kept going. That's when I got my number.
Comparing otherwise, if you hold it between 4:15 and 4 o'clock or 4:30, you end up owing like $6,000 to hold it. So you got to be closed out by 4:15.
Bingo. So the secondary phase to that, and that's where the margin calls are coming in to run that stock price up. What a tremendous trade you get every Friday. I just think it's the coolest trade of all. And it's at the end of the day, and I told him, just watch 345 to 415 every day. As an E-mini trader, you can make a fortune just in that last 45 minutes. So I need to be there the last, I don't want to talk to anybody. I shut the thing down and I go into a room. I was calling him from a bar yesterday, so no one could find me because I want that last trade. I'm dying for. I can make my living on the week before expiration. I can make my living on Friday in one day, and in fact, actually, I can do it in 30 minutes, and I can prove it just by going to a bar. I can't do it from my house because they'll find me, but I can do it from a bar. So I had to go hide at Mr. Joe's yesterday and sit in there and make this trade, and then talk to Mike while I was making it. But anyway. The key is to use, if you get a practice account here, and they're going to have a 20-minute delay. Every other place you go to practice will not be delayed. It'll be real time. So you always want to practice somewhere else and get used to the speed. It's not that fast, but you know you got to find you want a good connection and you want good speed. I'm answering too many questions, but but let me give you back to the hours that it's open because that was the question. It then closes for 15 minutes and reopens at 4:30. At 4:30, you're at a new day. Now, if you've kept your thing over, you can carry over an E-mini contract. And with Thinkorswim, your margin requirement is $5,600 per contract. And that means all night until 9:30. Everywhere else, it's $500. It's only Thinkorswim.
Yes, and they charge me $7,000 if I trade in my IRA account.
Well, I think in your IRA account, you have to have a minimum to do one contract on an E-mini is $25,000.
Yes. Oh, yeah. But outside of that, the thing is that.
But that's where you got to check around too, because it's
$7,000.
yeah. So all I'm telling you guys, if you're going to trade the E-mini, then it closes down. So again, one more time for hours, and then it closes down from 4. It goes open till 5:30 and closes until 6, and then reopens, and that's the way of the E-mini.
Almost 24 hours.
Now,
Close.
when you're making all this money, who's losing it?
I don't care. You are. I mean, honest to God, I really don't care. I don't know what anybody else is doing. I don't know. It doesn't matter to me.
The S&P futures market is the largest market in the world.
And it's just crazy.
And it's,
No,
I mean,
No,
it's going,
Forex is. Forex is.
you're right,
Of the futures.
of the future.
Of the futures, it is.
So it's
And the most
extremely
liquid.
volatile, or liquid.
Well, I don't know if it's volatile. I mean, but it's all betting, isn't it? CME and ICE, you've seen those two stocks. They're taking your bet. I mean, they make their money on spreads. They're making 25 cents, or they're making a quarter point every time you go to trade. So they're making a quarter point. They don't care who wins or loses. They got that money stuffed in an envelope. I'm just saying, it's very cool. Again, other things you can do though as a trader, and always keep this in mind: highs a day and lows a day. When you hit either one of them, what's wrong with buying a SPY, a real one? What's wrong with buying a SPY? You see the market come down and get killed. Now you're sitting here with a $200 loss. That's an automatic, you can put as many arrows up as you want. When you buy the SPY, you got time, don't you? So you buy the SPY and when the market's been cremated, that's when the day where you say, man, I just lost my shirt, buy the SPY when you just lost your shirt. And you buy the call because you got a lot of time to recover on this thing. But if you're a day trader, here's what always kills me. I'm going to tell you the story because it goes with it. I bought an 11 at 1146 using futures numbers. I shorted the S&P using SPYs. Okay, bet it down. I'm a genius. It came down like a rock within the next 2 days. I made $1,000. Now, here's what a genius I am. That's not so genius. You see where the market is now. The market at this number would have made me $6,000 if I would have gone to 11.4. And I was still completely open. I closed it with $1,000 in my pocket. I could have walked away with $11,000 if I trailed it down. So my lesson from that was trail it. Trail stuff. I would have been happy just taking 500 if it came back at me. But those are all the problem with being a day trader. Money on your table. It's so I'm trying to extend myself a bit more on these trades because we saw the other day 1179 in futures numbers, and it came all the way back to 1160. Well, that's a 19-point spread for 50 bills. I mean, God knows why am I. And so I've been saying that more on the website. I've been saying, hold it this time. Hold it. We got 76. Hold it. Let it go down. And we've been getting, you're getting bigger numbers. But everybody has a tendency to get nervous. And, because you really don't have to day trade it. When you're playing 2 contracts, you don't really have to day trade it. You can carry it. So those are thoughts. I mean, I do have cards for them. Cool website. Getting in the chat room. I don't think they're charging yet, but they'll let you get into the chat room to try them out anyway. But it's going to be huge. I don't know how big it'll end up, but it's going to end up pretty big. They're great traders, and the one guy, my oldest son, I don't remember him missing any trade in 6 months. 0. I've never seen him miss a trade in 6 months. And I think on the calls, I don't think he's ever missed one. In fact, I do it when he calls. If he calls a trade, I don't care what time of day it is, I do it. But he only does 2 trades a day, and I've never seen him miss one. So that's kind of cool, if you follow a guy like him.
Piggyback off him.
I live off, my son manages a $40 million portfolio for another guy, and he does it 2 days a week. So he has a license, but he'll eventually just do this full time. But he taught me to trade because I didn't ever want to do anything. I was just...
The danger that I would say, the negative side, I would say future. I say that, in option, I know exactly how much I'm going to lose on the worst day.
So put a stop in, the same thing.
Now, that was my question. In history, that you study history, what sometimes when stop loss didn't act, they...
Well, here's the downside to this type of trading, and you have to think about this through a market. When the market's down 200, it could go 300, couldn't it? It could go down 300. So the question that you have to ask yourself anytime you're making the trade long, or if that's the case, is how much more can this thing go down, before the day's out? And you have to think of time of day. In this book, they talk about time of day. There's different times where the market changes. Institutions come in. When you see a day where the market's down 200, the likelihood of it staying down 200 is almost nil. It might rally back to 150, but when you see that 200, you go, I'm going long.
Dead cat bounce, yeah.